Good morning and welcome to another edition of From the Desk of Dan White. And we usually, first of all, let me wish everybody a happy new year. Unfortunately, football is now over for us as the Eagles went down in defeat yesterday. So a very short playoff season in football. But hopefully 2026 will bring some good things for each and every one of us. As far as the market update this month, Wall Street analysts have always run as a herd, usually tilting toward the bullish side, and their 2026 forecasts are both. Bloomberg tracks an index of 21 strategists who maintain forecasts for the S&P 500, and this year they are 100% bullish. All 21 think the stock market will be solidly higher by year end. The average forecast in the group is for a 9% gain in 2026. Some are higher, some are lower, but none of the surveyists predicts a calendar year decline. That is a definition of herd-like behavior, which may not end well. And usually when everybody on Wall Street agrees on something, the contrarian says, do the opposite. And that's because Wall Street has a history of going all in at exactly the wrong time. Consider the post-COVID boom. Big money managers were obsessed with disruptive and innovative tech companies regardless of profits. And that didn't end well. The poster shot of this was Cathie Wood's ARK Innovation Fund, which everyone loved right up until it crashed. It dropped 76% between late 21 and the end of 2022. And that's just one example. Everyone knows about Wall Street pouring money into dot-com stocks and the housing market before the crashes in 2000 and 2008. But as contrarians, we must admit one thing begrudgingly: betting against Wall Street's outlook for 2026 may not be the best strategy. Wall Street is expecting stocks to rise this year, and as much as I'd like to be a contrarian, there's reasons to be optimistic as well. Oppenheimer Asset Management recently predicted the S&P 500 index will reach 8,100 by the end of 2026. That was the highest forecast among major Wall Street brokerages. To hit that level, the index would need to rise roughly 17% over the next 12 months. And after the roughly 16% gain we had in 2025, that would make 2026 the fourth year in a row that the S&P 500 advanced by double digits. Meanwhile, Deutsche Bank expects the index to finish the year at 8,000, and Bank of America had the least optimistic view with a target of 7,100. But all the major banks are calling for stocks to rise in 2026. And it's often easy for us to see what opportunity Wall Street is missing or what risk it's ignoring. In this case, though, I can kind of see a clear path toward another strong year for stocks. The economy is showing some signs of weakness, in particular with rising unemployment. But paradoxically, that could be a good news for stocks. As we talk about all the time, bad news typically leads to lower interest rates, which are good for stock prices. But even with signs of weakness, the housing market is confident. The overall market is confident we won't see a recession in 2026. And more importantly, we're not seeing the euphoria you would expect near a market peak. People are scared, not greedy or euphoric. Think about your own interactions. Have you gone to a party around the holidays and the conversation is dominated with stock and stock market conversation? That's usually what you see at a peak, and that's not what we're seeing today. So from what we're seeing right now, the average investor isn't blindly giddish about stocks, which means the bull market probably hasn't reached its peak yet. So it wouldn't surprise me to see stocks post a positive return this year. But that doesn't mean we won't have volatility. As we've seen just in the first 12 days, I mean, the geopolitical scene shows no sign of winding down anytime soon, with Venezuela, obviously Ukraine and Russia are going into a fourth or fifth year of war. So we'll probably see volatility, but there's not an overwhelming reason to get out of stocks at this particular junction. So that's it for our market update. Google reviews. We always would like for our clients, if they've had a favorable experience, to go online. We have 3 separate ones. You can give us a Google review for Middletown, one for Glen Mills, and one for Lewis. So if you have a Gmail account and you haven't yet given us a Google review, we would certainly appreciate that. We also started a while back into a mailbag segment. And in the mailbag this month, we have, what is the best way to invest now? Should I be more conservative once I retire? How do I protect against market downturns? Should I buy annuities? Now, these are all great questions, and I think if you've been with us a while, you kind of know our philosophy is to build a floor of guaranteed income, whether that be through pensions, Social Security, through income annuities. Then once you have that floor where you have enough income coming in on a monthly basis, you can afford to take some risk, depending upon your risk tolerance, with money in the stock market, because our big concern is the sequence of return risk. So you're pulling money out of the market at the wrong time. Well, if you build that floor of income and you have enough guaranteed income coming in, and we don't have to invade the portfolio at the wrong time, it makes for smoother sailing. So hopefully that answers that question. I mean, maybe annuities fit for you, maybe they don't. It really does depend on every individual's situation. Referrals. It's never too early to start talking about referrals. We have a full slate of upcoming dinner seminars for your referrals to join us at. And as a reminder, if you do give us a referral and they do come to one of our events, or they come in for a meeting, you become qualified for our exclusive referral event. And the first one is going to be held, our ladies referral event, which is taking place in March. So the upcoming event is our ladies referral event. We're calling it Sud-sational Soiree. It's taking place on Thursday, March the 26th at Buff City Soap. We're asking the ladies to join us as we learn how to make bath bombs and soap while enjoying lunch. More information about the event and how to register is going to be emailed shortly. And then the next thing on our upcoming events is our golf outing registration. I know it's a little chilly out there for golf right now, but the warmer weather will be coming soon. The golf outing registration will be live at the end of the month. So please stay tuned for email notifications on how to register. Last year, we heard that we got it out a little late and guys already had golf trips planned. So keep your eye out for that at the end of the month. And a couple other things to note as we head into winter. Now that we're in the winter season, please keep a lookout to our Facebook page for updates on any office closures due to snow. Tax season is fast approaching. It's time to start thinking about filing. Please note that for those of you who have Charles Schwab accounts with us, the 1099s, you can expect to receive those by the end of February. And the last thing we did put together a very nice film, a year in review from all of our events in 2025. I thought it was outstanding. And you can click the link in your email to watch our year in review from all the events we did last year. So again, we're turning the page on 2025. We're excited about 2026. We got a lot of good things in store for not only us, but for our clients as well. So I hope everybody has a good week, a good month. And until next time, this is from the desk of Dan White. Have a great day.